Cerebras priced this IPO, Andrew, $185 a share, above the top end of the marketed range. I'm looking at the Bloomberg terminal. Shares indicated to open $350 a share. Your reaction to that?
Pretty good day, huh?
How you feel? I mean, did you see this coming? There's some mechanics to it, right? But I know you. I know you like to, let's be honest, you like to talk about what's happening in AI, the big focus on inference, Cerebras' place in it. But this is the biggest IPO of the year so far. What does it mean to you and your employees and your backers?
It's the biggest tech, one of the biggest tech IPOs in history, and it's the biggest semi-IPO in history. We couldn't be more proud. This is the culmination of a decade of work, of countless late nights and long weekends. We are enormously proud and excited and ready to get back to work and start working on the next great thing.
Again, the market is indicating shares to open at $350 a share. Let's see where we're at when trading starts. But you're being priced in as a major player in this field now. What evidence would you point to that you are, in fact, a major player? A lot of focus is on the concentration in the relationship with OpenAI. Tell me about some of the other frontier labs or other names that you have some concrete talks with.
Sure. In the last 4 months, we announced a deal with OpenAI that's north of $20 billion for 750 megawatts of compute. We also announced a major engagement with AWS, where our equipment would be deployed in their data centers. I think those are obviously the largest, but there are dozens of others that are in what used to be a big deal in the $10 to $50 million category. And so there's just an extraordinary demand right now for fast inference. We're the fastest, not by a little bit, but by more than an order of magnitude. We're 15 times faster than the next nearest competitor. And as AI has become useful, everybody wants it to be fast. Nobody wants to wait.
On that, 21x on performance, and also like a lot of emphasis on the dollar per token, right? That is the metric that the field cares about. But that's on paper. You just talked about the AWS relationship as an engagement. When does the word engagement end and real revenues start to show up for you from those relationships?
Sure. We signed a binding term sheet with AWS as described in our S1, and we're working through the master agreement. I think in dealing with organizations of that size, it takes a little time to dot all the I's and cross the T's. But we are extremely confident that they will be an enormous channel for us and a partner in delivering our technology to large enterprises and medium-sized enterprises around the world. I think they are one of the preferred cloud providers for just about every enterprise on Earth. And so an opportunity to have your solution embedded in their offering as part of their bedrock offering, that's a huge win for us.
We're live on Bloomberg Television and Radio. This is a Bloomberg Tech Takeover, and we're speaking to Andrew Feldman, the CEO of Cerebras, whose company just priced the IPO at $185 a share and is indicated right now, I'm looking on the Bloomberg terminal, maybe to start trade at $350 a share. Andrew, I think you know this about me. Whenever we have a big moment to have a conversation like this, I always go to the Bloomberg Tech audience. What do they want to know? And actually, the first question is, what was your attitude toward retail investors? Why did you not do more for the retail investor in this big moment for your company?
We were more than 25x oversubscribed. There was a lot of hard decisions that needed to be made, and nobody got what they wanted. And we did our best. It's about all you can do when there's 25 times more demand for your stock at the institutional level and at the retail level than there are shares to be sold. So we're really proud of the way we chose to do it. We thought we did it with integrity. And I think we are very comfortable with the ending allocation.
full stack, fully vertically integrated. And what I mean by that is you literally build the supercomputer top to tail, right? So NVIDIA will do the tray, not just GPU, but then Dell, Supermicro will assemble it. Dell's margins, low teens. NVIDIA's margins, mid-70s. Your margins, 40, 41%. And what I'm trying to help the audience understand is why that strategy of owning everything top to tail is going to pay off in the long run. And I would say the other question I get for you is, what's the future outlook for margins based on your plans?
Well, I think a couple things. I think we have obviously opportunities to improve our cost structure. You know, we did $500 million last year in sales. That means we put $250 million in the supply chain. Obviously, that's not an efficient spot. As we grow, we will have more leverage in the supply chain, and our cost of goods will come down. I think we have an opportunity to increase prices. I think the demand for fast inference is overwhelming this minute. And so I think in the long run, we'll be really proud of our gross margins and where they will sort of wash out as we hit scale.
I've got a question for you from a terminal client via IB. Thank you for the question. Everyone's tuned in right now, Andrew. They want the detail. And so one way that people look at it is that, you know, this is custom silicon, but Cerebras isn't a chip per se. It's like wafer level.
Right.
Is there a reason why you can't just sell that versus the whole server?
Yeah, that's a good question. For the entire 70-year history of the compute industry, every previous effort had failed to build a chip of this size. So for your audience, this chip is the size of a dinner plate, while traditional chips are the size of a postage stamp. And not only had everybody failed until we succeeded, but several tried to copy us and have since failed as well. Part of what we were capable of doing and able to do was that we were able to use not just the chip, but also our expertise in packaging and in system design to solve some of the problems and build a truly compelling solution, right? You don't just get 15 or 18 or 20 times faster than the competition because you built a good chip. That's one of a collection of different things that enable that sort of performance. You can build a great chip, and the system vendor, the ODM, can nibble away at your performance by not delivering the right amount of power or the right amount of I/O. Right? There's a reason why NVIDIA then sought to control the I/O, the NVLink, because they didn't want others to nibble away at their performance. And so by building the system, we're able to optimize all parts. I mean, you could ask the same thing about Porsche. You know, why don't you sell just engines, right?
Andrew.
It turns out that that's a 911 is a beautiful car because of the engine and everything else they put in it.
Andrew, the team's telling me we got to go, but I got to ask you, $5.5 billion, what do you use the proceeds for? And actually, how flexible can you now be in allocating capacity to new customers? We just have 30 seconds.
Oh, I think we'll use it to increase capacity. We are excited to bring many new customers on board. There's tremendous demand for what we're doing. I think we can be aggressive on that front.